Hello everyone, this is Popeye. I want to record an educational video on how I use volume profile. Volume profile can be used in many different ways. I use some basic functions that are easy to use. There are many educational video and posts around, so this video doesn't want to be a super comprehensive educational content on the subject, but I think it can be a powerful tool if properly used. So I will show the 2-3 scenario where I use and where I think is useful. But before going into the video, make sure to subscribe to the channel, to like this video, and to share it as much as possible. So the tools that I physically use is a simple tool in TradingView, is among the standard indicator, and you can find it here on the left bar, if I'm not wrong, here, and it's called fixed range volume profile. So it's a free indicator that you can find in TradingView, but also in the most of the trading platform. So what does it show you? Now I'm using it in night time frame, just to let's take this range. So the first of all, since it's called fixed range volume profile, is need to be used in ranges. So you don't use this in uptrend. Then we will see that price is fractal. You can also use it in uptrend, just modifying the time frame. So the setting I have are very basic. So I keep row size 100, volume area 90. So I try to keep a very basic indicator. So what does it show you here? It mainly gives you several information. It shows the volume exchanged compared to time and to price action. So the three major information that I collect from this fixed volume range are these. So the blue line in the middle, this is called point of control. So this line that we do have here is the POC, usually written, or point of control. This is the most traded level in terms of volume of this range that I selected. So I selected the range that starts from here and finish here. And in this case of Bitcoin, 63,000 was the most traded in terms of volume quantity, so amount of money exchanged, to make it with a very vulgar language, on this range that we had from March 2024 to October 2024. So this is the first information. The second two information, you will see here that the color decrease, so it gives you the volume area I. So in this case, 71K is what in technical term is called volume area I, or VAH, is the most, let's say, the high level of this range in terms of trading activity. Above here, where the color become less dark, more light, this is an area where there was very little trading activity in terms of volume. So probably if we move to an higher time frame, this that is mainly the level where we traded above this volume area high and all this level, they are just little weak. So price visited this area, but without any relevant volume affecting the volume profile. Same goes for this level down here, and this level that I show you when the dark color start and we start with the lighter color. This is called volume area low. And applies the same level. So the most traded level, let's say the traded level of this range, are within, let me clear it up, the valid or relevant range level of this bigger range is this one. Above and below this range, what happened is not really relevant in terms of volume. So price visited below this area on these 3 instances, it visited above these 3 instances, but was never traded in terms of volume relevantly. So we do have this 3 level of relevance: volume area high, point of control, and volume area low. So first of all, we do understand that the relevance, first of all, the fixed volume profile help us to give us the relevance of a range we are interested in trading. But to make a step backward, why range form? Range forms because there is a sort of agreement within market participant, bulls or bears or whatever you want to call it, that price at the higher level of the range, so at range high, is an expensive price. So every time we reach that level, everybody want to sell. So long position potentially take profit, short are opening, because everybody believe that this level, the price of the asset, in this case of Bitcoin, is too expensive. Same opposite applies on the lower level. So in a range, there is an agreement that at this level, the price of the asset is at discount, so is a cheap. So long positioning are opening down here, and short positioning are taking profit. That's why price start to range or consolidate within a range, mainly because there is simply an agreement about this level on market participants. So it's important that you understand the concept. While in an uptrend, there is not an agreement. Buyers are stronger than sellers, so they move the price higher. In a range, nobody stronger than nobody else. There is an agreement, and they keep ranging and consolidating inside this level. Then there is much further deeper concept, but is important for you to understand. That's why in a range, this level, range high, is called premium, and the range low is called discount, because you want to buy at discount and you want to sell at premiums. Furthermore, the most agreed price within a range is the point of control. That is something that I will show how I use, and is very relevant. So the point of control of this range, so for Bitcoin around 70k, 69k was the premium price, around 56, 60k was the discount price, and 63 was the point of control, so the place where market participant, bulls or bears, agreed more on the price of Bitcoin. And the price action show you how this agreement was shown because this price was tested a lot of time. In 9 months price action, this price was constantly, the price constantly came back to this level, came back to this level, came back to this level, tested, retested, broken, retested, retested, support, resistance, is the most agreed place where the price has been traded, because everybody believes that this was a very fair price for Bitcoin. That's why this level is also called fair value level, because it was fair for all the market participants to buy or sell or to hold the Bitcoin at 63k. So now going into strategy, the fixed volume profile helps you, first of all, to determine a range. So first of all, you have to understand that price is ranging, and you can start to use the volume profile determining the area you are checking. So as soon as you realize that price started to range, you draw your volume profile indicator. How you do? You simply select it. You will point anywhere in the chart the moment you want to start it. It will start with a line, then you go, and you check until the level you think the range is broken. Of course, now I'm doing it with a chart that shows already where the range finish, but I could have drawn the volume profile back here. It would have given me, let's make the example, it would have given me this volume profile. Then if I remove the replay function, I can see that then the range evolves. So as long as we range, I personally try to make the volume profile, fixed volume profile evolve as long as we range. Just to say it once again, I say it a million times, price is fractal. So you do find range everywhere. Also, this is a little range where you could have used the volume profile and see this little range in a lower time frame was more evident, but this was a range and this was its volume profile. So the first practical use is to help you to define the range, and while you define the range, it defines for you resistance or range high. It gives you mid-range and it gives you range low. Then ranges can be traded in many different ways, and I don't necessarily use volume profile to map level. But since now we're speaking about volume profile, this is the range this volume profile would give you. So first of all, we know where potentially longs should take profit. So we know potentially where to look for long, that is the lower band of the fixed range. We do see where potentially we want to take profit on longs and open short, that is the premium level. But furthermore, we know another information. We know where mid-range is, and mid-range is, generally speaking, the last area you want to do business in a range. Because it's the most choppy level of all the range. So it's the level most traded. No, there is some issue with this. Sorry, this is another indicator. So since it's the most traded level within the whole range, you don't want to do business in the most traded level on each range, because it's exchanged a lot and you want to try to do business far away from that level. So while the range is evolving, you want to stay far away from point of control, and you mainly use volume value area high and value area low to look for long and to look for short, and you avoid to trade the point of control as long as you are not scalping or using some other strategy. But then the volume, the point of control could become interesting once the range is broken. So once the range is broken, that level could become a strong support or a strong resistance. So just to show it visually on this very high time frame price action, we did have a range evolving in this area for 9 months. Price broke above, then we consolidated in this area and price broke down. So we do have two relevant ranges consolidation. For the moment, this one appear to be an accumulation range because we broke to the upside. This appear to be a distribution range because we broke to the downside, and these two level give us 2 points of control. These 2 points of control could potentially in the future become support or resistance level. Why? Because these were the most traded level of these two consolidations. So since there were support and resistance level very reliable, very traded and very exchanged, not just in terms of time and times it was exchanged, but in terms of volume, these two levels in the future could become support and resistance. So potentially, if the price visit down here, we can expect this level to be strongly defended and to give a support. And in the other way, we can expect this level to be a strong resistance level. But let's try to look at something more actionable on lower time frame. If we see something, I didn't prepare the price action, but we see if we can find something together. So we go on the most recent price action on Bitcoin on low time frame. And what is interesting for us is to find the little ranges. So for example, here there was a little consolidation. So context is key. What is happening on a higher time frame? Bitcoin is downtrending, so it's going down, price is going down. So we do have a little consolidation here, price continue to break down, and then we can see what happened. The little consolidation we had was more or less this one. That give us, let me zoom a little bit, that give us this point of control. Then you can be a little bit more precise with the consolidation. That give us this little point of control. And what happened? I didn't prepare it casually. Price almost reached this point of control and was again rejection. So again, it's not totally precise, but it gives you a good level to monitor because you see price is downtrending. We did have a spike on the upside, just to give the context. Okay, so price is downtrending down here. So our bias here is bearish because we are moving down like this. So we are looking for short entry. What happened that we do have a further lower high, further low, kind of lower low, and then we retested here, we continue to go down. So you could add the point of control of this little consolidation here on your strategy that would allow you, so your bias was bearish, you would look to short a new lower high. This level would have helped you to a little bit define your entry and a possible resistance level. So in this case was pretty helpful. If we do the opposite and we look at this level here, is a similar consolidation, very similar to the one we had here, was more or less this level. And what happened? It didn't do anything to price. So basically, yes, you can see that is a relevant level, more or less is exchange, but price was sliced through. Because as every indicator, if it's used in the wrong, with the wrong understanding of price action, become totally useless. So price is going down, you use a point of control of a bearish trend, market structure is more powerful than this point of control, and we keep moving higher. Not sure if I can find some further example, maybe in a higher time frame. I think something. Let's see if I don't recall all of them. Sometimes I trade them, but sometimes I don't. Sorry. I think that more or less the point of control of this bigger range was somewhere here. Yes, was not so precisely tapped, but we see that more or less the resistance we faced here when we broke down was at around this point of control. So it's not a super sharp, precise level, but when we broke, we always failed to reclaim this point of control. This also can help you to give you confluence to your possible strategy. So here there was the range we were trading. Again, to repeat, value area high, point of control, value area low. So many people here, probably including me here, started to call for a deviation because we reclaim range low. But somehow below the point of control, price again rejected and continue to go down. Because this again could be a strong resistance level. So I think it's enough on the way I use it, and you can use a different technique. Especially I use it also on demand and supply level to further define level of interest. Let me see if I find an example to further explain. I already did a video in the past on a trade setup that I took, but probably we can use this example again, that in this specific case, we would probably have several confluence. That is that probably this level has some sort of supply. Yes, it's this one. So there was indeed this supply here on the 4 hour. There is probably a further confluence with the Fibonacci level here, more or less 75, and then there is the further confluence of our point of control of that listed consolidation here. So this helps you to define better your entry and to add confluence to your level. So if we check it like this, we do have a bearish bias. Price is going down. Price come here, go down. So we do have a little consolidation here that gave us the point of control. We do have a supply level here that gave you a further possible entry for a rejection, and we do have also some Fibonacci level here. Price arrive here, continue to break down, and then move down again. The other way I monitor it, not really use it for trading purpose, is I have it in my trading light chart. So I keep monitoring two different volume profile. There is many visualization of volume profile. The first one is this one on the right, that is the visible volume profile. So this volume profile here that shows you the most traded level in terms of volume of the area I'm zooming in and zooming out. So the more I move, the more this level move with the area I'm monitoring. So if I want to see a specific area, I make sure that is visible the area I'm interested in, and in this right visualization, I get the most volume that you see the red where it become more expanded, and I also see the point of control. So I know that if I zoom and I want to check this latest area, I get this the volume profile of the area of the I'm visiting. The other one that I'm using is the one related to session. And I have it in the settings that I only want to visualize clearly the one that have not been broken. So this white line that you see, these are the point of control of former session that has not been taken out. So this gave me past level, possible point of control level that are still untapped and can act as support, as resistance. This also give you locally a visualization of possible strength and possible weakness, because once point of control start to be broken to the upside or to the downside and they are respected, it show you if a trend or using control, if bull or bears are in control. So now I can see that possible level of resistance is here. I can see that the previous point of control of the last session is down here and can be potentially a support level, and I can see that currently in this session we are below the point of control, so this session is possible a bearish session. So it's just to visualize strength and weakness, and is also to visualize where real point of control is. So these are called volume profile, visible range, this one on the right, and volume profile session volume, the one I have in the chart here. You can have many other visualization of volume. Again, this is not a super comprehensive guide or lesson on volume, but is the way that I mainly use it for my trading every day. So I hope it was it was clear. Just to sum up, volume profile is a free indicator in TradingView. You can use it for trading the current range you are currently the price is currently trading, and you can use to select previous and former ranges in order to see possible resistance and support level, to help you and to allow you to find possible entry for short and for longs. I think it's everything. Let me know in the comment below if you enjoyed this video, and make sure to subscribe to the channel and to leave a like. Enjoy and stay safe out there.